What's going on, guys? Welcome back to the channel. In this video we have to go over the technical analysis because we are sitting in this bullish pennant still and we are towards the upper end range. So if we break this, we could see a lot of potential to the upside and potentially force liquidations and margin calls. So we need to talk about that as well as the ortex data, because this is signifying we see about 4.14 million shares that were covered. Keep in mind that's the T+2 settlement time. So before other people start to say the shorts are covering, let's address this and clear the air of what is actually going on, as well as go over all the other ortex data that you guys need to know, as well as the Stonk tracker data. Take a look at the option chain and where we see the most highest likelihood of seeing an actual gamma squeeze, because like I say in these videos, to go to these $1,000 price points that everybody wants and that quite frankly is coming, we have to see a short squeeze and a gamma squeeze. So I'm going to give you guys my timeline that I am looking at. This is not a prediction by any means necessary, but we just need these two factors, like I said, the short squeeze and the gamma squeeze, to see these high price points. So that is very important to go over, but we're also going to go over the dark pool data. So without wasting any time, let's get into this video, guys. First things first, we have to talk about the technical analysis because we are sitting in this bullish pennant, like I said, on the upper end side of this. Now what happens once we do break out of this bullish pennant? Well, this is a huge sign to algorithmic trading programs as well as just day traders that follow technical analysis that we are likely to see a significant breakout. Now it doesn't always happen like that, but it usually does, and especially with trades like AMC, you really want to pay attention to the technical analysis. Now the MACD is not really signifying anything too crazy. We're actually slightly bullish, but we've been consolidating, like I said, actually to the upside. So that basically just tracks the momentum of how much we are moving in any given day and the inflows and outflows. So that is not too significant, but the TSI actually does have us bearish as well. Now let's take a look at the 15-minute candlestick chart to get a better picture of what is actually going on. And we did see a low today of $54.65. We found some strong support, and that is pretty much where we started to rally about 2 days ago, when we did have this really positive day to the upside, and then we kind of chilled out, as you guys can see right there. But if we do draw a trend line on this, because I think this will provide a valuable level of support to at least keep your eye on. Now a bigger level of support is gonna be at about this $53 mark, where we actually touch this right here and we touch 52.97 right here. So that'll be a more significant level. I'm not gonna post that level on this chart just because we're obviously going to have to break past under the $54.82 mark. So that is what I expect as far as potential downside. Like we seen earlier, we're going to see some solid support coming in, and that is when we started rallying just a couple days ago. So that is important to keep in mind. We actually went to $61 after we did hit this low of about $54. We ran up to 61, opened in pre-market, and then sold off. This was yesterday. So this could honestly go either way, but if we do see this breakout to the upside, like I said, over the bullish pennant, that'll be a very good thing. As far as the RSI, we are pretty much neutral as well. Like I said, we've been consolidating, so you're not going to see too many technical flags that are signaling a downtrend or an uptrend at this particular moment. You're really looking for that price discovery, and like I say in these videos, just the fact that AMC, especially on a significantly low volume day than we have ever seen since we started to rally, this is literally the lowest volume day we have seen at 58,694,000. The fact that we are not selling off, especially on these days, and even managed to go up if you include after hours at about 0.8%, I do think that is a great thing overall. And once we do start to get that volume come back into the stock, because it will eventually come back to the stock, people will start to trade it, more algorithmic trading will start to happen with AMC stock yet again. But we're really looking for these technical breakouts or a catalyst. Now we do have some blockbuster movies that are coming up which could serve as a catalyst, but I don't want to get into that too much in this video. So that is everything you guys need to know. We're pretty neutral, but still on this uptrend to the upside. If we break out past about 59 and even really $60, that should signify a pretty good break, as long as you don't come straight back down like we seen the other day, going up to 61, come back down under this bullish pennant break breakout level. Now let's get into the ortex data, guys, and for the short interest change, we have negative 4.12%, return shares of 5.05 million, borrowed shares of 916.3 thousand, so that is a borrow change of negative 4.14%. Now I personally have a hard time believing these ortex numbers, especially when there says there's a lot of shares that were returned more than shorted, just because one, we know there's a lot of dark pool activity going on, so it's hard to tell the actual numbers, but two, ortex repeatedly a number of times have put out tweets basically saying that most of the short interest with AMC has actually been due to naked short selling. So you really have to take this information with a grain of salt, and I quite frankly don't think shorts are even covering 5 million shares worth. Why wouldn't they have covered a long time ago? It doesn't make sense. They're holding out and they don't want to cover their short positions. And why do we have the short interest just went from about 13.5% all the way up to 19% in one day? Because ortex had revised their estimates because there's been a lot of naked shorting that's been going on. And if you guys seen that video that Matt Kors made, that ortex actually emailed them about the naked short selling that's been going on and how that does impact the short interest data. So take this with a grain of salt, do what you want with it, but I don't think these are actual accurate numbers. Now, we might have seen some shorts cover, but I don't think too many. If we look back to this actual day, keep in mind with the T+2 settlement time, so that was 2 trading days ago, this was the day that we actually popped about 7% for the day. So it wasn't a hugely impactful day, but nevertheless, take these numbers with a grain of salt. Now, the share utilization is pretty much flat still at 88.49%, and that is essentially out of 100% of shares that can be sold short. How many of those are sold short on a percentage basis? And we do have 88.49% of those shares that are sold short, so it's fairly hard to get your hands on shares to actually sell short if you wanted to. Now, the average days on loan is going back up from this low that we've seen at 31 days, which I talk about quite frequently on this channel, is either that shorts have either doubled down in their positions. Say if you short it at $10 and then you short it 50, your average short position is gonna go down, right? Your average days on loan is gonna go down as well. Or you could just be seeing more shorts getting into short positions, and that could be bringing down the average days on loan as well, or the average days that these short positions are out. But we are seeing this actually climbing. Now, the last thing as far as the ortex data that I do think is important for you guys to stay up to date on, and that is very important for the overall movement in general, is the share utilization. Now, the lower this goes and the higher the short interest goes, I think that is overall a good thing for the short squeeze, because we will see that availability for more shorts to short the stock. That's what we want right now, is shorts to be loading up their short positions, which they already have been doing at 18.39%, but you want to see more available shares start to become available to be able to sell short, more people actually selling those shares short. So you want to see the share utilization actually coming down while the short interest is going up. So that is pretty much the last thing that I do pay attention to as far as the ortex data, and that is really a key metric as well if you do know how to read the share utilization. Now let's take a look at the Stonk tracker data, guys, and for July 2nd we see a lot of out the money contracts that are probably going to expire worthless, about 234,228 contracts. Now, unless something drastic happens in the next 2 trading days, a lot of these will expire worthless. Now, we will want to see if we close above $60, because in that case we will have a lot of options that do expire in the money, and we're going to take a look at that. But we only have in the money of 55,436 contracts, so nothing too significant unless we do see a huge move, and that could kickstart a gamma squeeze. But unfortunately, a lot of these options, I will show you guys this, but they are held at over $100 strikes, right? $100 to $145 strikes, which I do think is unlikely we go to there in the next 2 trading days, but then again, anything can happen. Now, as far as next week, this is something that I've been saying. A lot of people just take these contracts, if they win, lose, whatever the case is, and roll them over, right? Sell them out, take whatever money is left or profits, and then roll them over to the next expiration date. So we do see this actually climbing the most as far as a percentage basis out of any other expiration date. We see almost 103,000 contracts that are out the money, 19,313 that are in the money, but overall, not a very significant week. But for the July 16th, this is something I've been saying. This is not a prediction, but I think the most likely time frame to actually see a gamma squeeze and this short squeeze is going to be July 16th, just because of the fact we need a gamma squeeze as well as a short squeeze. Like I said, that is a proven fact. If anybody tells you differently, they are lying to you. Now, for this expiration, we have 90,075 contracts that are currently in the money. That is the highest expiration date that calls are actually in the money, besides until we get to September 17th. But then we do have 205,362 contracts that are out of the money, and that is very important because you want to see these contracts go in the money, and a lot of delta hedging will be going on then. But on this week as well, for July 16th, we do have some blockbuster movies that are coming to AMC theaters, so that could be a catalyst that does send AMC much higher. So that's something I'll be watching for. As far as the other expiration dates, it's really too far out to tell if there will be any significant ones, but the August 20th is probably going to be our next best or most likely chance for a gamma squeeze, and then after that, obviously September 17th. But I don't know if it'll last this long. I don't have a crystal ball. It could happen tomorrow. It could happen July 16th. I don't know. I'm just presenting the factual information that you guys need to be aware about. Now, as far as the dark pool data, guys, keep in mind this is a running aggregate total, but for these two numbers at the top, those are the ones that are actually for the day. And let me just pull up AMC real quick, and for the day, we actually see almost 3 million net short volume as far as the shares that were actually shorted on the dark pools. Net short volume as far as the dollar amount of 169,483,290. So this has been dropping significantly day over day. I believe yesterday we were at about 5 million shares that were shorted in the dark pools. So this could just be due to the fact that we are kind of stagnant on AMC stock. Maybe some of these guys do think we're going for a rally, so they're not going to participate in some of this fraudulent activity and try to get around the practices of the stock market in the dark exchanges. That could be one reason, but I think a more likely reason is probably the SEC is telling these guys that they need to limit their actions on the dark pools, because we have, quite frankly, been stirring up the whole investment community, and everybody is talking about stuff they weren't talking about 6 months ago. So I do think that is the most likely reason why we actually see the dark pool net short volume going down every single day, pretty much consistently over the past week. But as far as a net total position that is sold short, 441,250,000 shares. Position size as far as a dollar amount of 23,608,920,000. I don't like to pay too much attention to these two numbers, the totals, like I said, the 441 million shares or the 23 billion, but I do like to pay close attention to, like I said, the daily activity in the dark pools. Now, that is pretty much all I do have for that. Let's take a look at the actual option chain and see what is going on. I don't know why it is never on here whenever I do go to click on it, but we can pull it up real quick. Stocks, options, where's options? Yeah, we can pull it up. Let's see, AMC. And we're going to want to see what dates, or what strikes I should say, have the biggest open interest. And obviously when we are on the July 2nd, that is expiring this Friday in the next 2 trading days, we do see a pretty substantial amount of open interest, 5,000, 9,000, 6,000, 25,000 up until the $60 strike. So if we can break that with some solid momentum, then we could definitely go much higher with AMC stock. Now, the $65 strike at 14,000, that's pretty significant as well, but we're really going to want to watch if we close over $60. Now, let's take a look at what to expect next week as far as options activity. And this chart is actually not loading, but for the $60 strike, we have less open interest than we actually have expiring this Friday. But I do expect this number to jump over the course of tomorrow and Friday, because obviously, like I said, people are just rolling over contracts and buying ones that are further out with any profits or any money they have left from previous trades. But we really don't see much activity on the option chain. Like I pointed out, it's at the $70 strike, we do have 8,400 in activity, and then some of these are just multi-hundreds, like some of the lowest numbers we've seen in a long time. And then obviously once you get to about 100, you're going to see that option activity start to increase as well, just because, quite frankly, they are cheaper, and a lot of institutions, even hedge funds, they are probably selling selling these. So that is where I think it's important when you come to July 16th. So what happens when institutions, hedge funds, they actually sell these contracts, usually just selling them naked, right? They're not doing any hedging because they don't think it's going to get to this price point. Well, when they do that, when the stock starts to go up to that price point, starts to get close to $100, you see a lot of hedge funds, institutions start buying shares to cover that shorted position. Because if you have to sell 100 shares at $100, if you sold a call, right, that's selling 100 shares at $100. That is your right to sell 100 shares at $100. If you don't own those shares, you have to buy those shares, if you're smart at least, if you want to cap your risk below $100 so you can still make money on the trade if AMC did close over $100 by this expiration date. Now that is only an example, but that is a good example of basically how delta hedging does work, and I think that's why you see a lot of open interest on these contracts as well, just because I think a lot of hedge funds, institutions think they will actually expire worthless, so they are willing to take on that risk. Possibly by doing this, they are creating income to help offset some of their short positions in the stock. That is what I imagine is happening. So if you guys are actually purchasing these 100 to 145 strikes, you're probably hurting the movement more than anything else, because they're not going to start hedging these until we get closer, and if we don't get closer, you're going to be losing money while these hedge funds, institutions, and market makers are making money. Essentially, the money you put up for the contracts, they're going to be making that whole thing. But as far as July 16th, the very important expiration date that I have been talking about is we have 15,633 contracts that is on the $60 strike, and then it's pretty much single digit numbers, even multi-$100 levels, nothing crazy at all. But once you get over $70, that's where you see a lot of activity kicking in. So if we can close over 60 this week, next week go to about 65, and then that following week break over that $70 price point, that's where you're going to see a lot of delta hedging going on, and that's what I think will cause the shorts to actually be forced to cover. But we have almost 28,000 in open interest for the $70 strike, as well as the 75. We have almost 16,000. Then we do have 6,000, 3,000, 2,000, 1,000, and then 28,000 at the $100 strike. So obviously, if we get to $100, you're going to see a lot of momentum in the stock. It's going to go very fast. You're going to see a lot of shorts covering. You're also going to see a lot of delta hedging that is going on. So I think if we can get over $100, it is pretty much a no-brainer that shorts are going to have to start covering their positions in a massive way. Now the 145s also have 42,000 in open interest. The 110s have 21,000, almost 22,000. So you're seeing significant activity over $70. If we don't break that $70 price point, then we won't see a gamma squeeze, but if we do, I think we will see a gamma squeeze. So that is everything that I've been looking at. That is all the data, technical analysis, ortex data, stock tracker data, dark pool data, and the option chain data that you guys need to be aware about. If you like the analysis that I provided to you in this video, hit that like button for me. Consider subscribing to the channel. Let me know down below in the comment section if there's anything else you would like me to cover when it does come to AMC. I would gladly make any videos you guys would recommend or suggest that I do make and cover a specific topic, something that we don't cover on this channel preferably. Also, I do have links down below in the description. One of those links for public, get up to $70 in your choice of free stock. No deposit necessary, no need to even link a bank account. And if you did this right now, you would have your free stock in about 3 minutes time. And they do not route your order flows to companies like Citadel, just like Fidelity and Merrill Lynch. Those are the only 3 brokerages that do not do that. So if you are not signed up with public, I do highly recommend you do that. It is literally by definition free money, as well as deposit $100 with Webull, get 4 free stocks, each of them potentially worth up to $2,400, as well as check out the buy and sell alerts. We have been killing it over there, growing our accounts on a consistent basis with a very high success rate in stocks, options, and crypto, whether it's for the long term or a day trade or a swing trade. I send out alerts in real time, so you guys will be notified every single time a trade is made. But with all that being said, I will see you guys in the next video.